Hey everybody, it's Mark Johnson at Guaranteed Rate, and today's mortgage market moment here is got some pretty good news actually. Even though last month interest rates went up another like 0.15% from the week before, so we've had like 3 or 4 weeks where it's just been going up and up and up. Last week we had some really great inflation news, and so what that showed was that basically we had numbers come in lower than expected. And so we should see this start to drop down right through here. um, Probably in the next week or two. And so let's just go right to the to and share my screen right now. This is the bond market here. You'll notice that boy, interest rates went down, up and up and up. Bond markets, just tanked as far as the value of the bond market. So when the value of the bonds go down, interest rates go up. And then right here, this was basically last Monday. So we just went down and down and down, and then Friday we hit kind of this bottom. There's several different bottoms here, but what I'm showing here is that on Monday it got just little bit better, which was basically what Thursday was of last week. And then on Tuesday, everything was just really calm because nobody knew what was going to happen. Well, you see here on Wednesday, the bond market went up and interest rates came down quite a bit. And so that was good. Same thing on Thursday. And then we kind of just stayed in the status quo right here because nobody really knows what direction interest rates are going to go right now. A lot of people think that the Federal Reserve will raise rates, and they probably will on July 26th. That doesn't mean it's going to be bad for interest rates. I'm going to go ahead and show you the 10-year treasuries again. Here it is where we had, I believe this was Monday. Excuse me, that was Monday. So that was Friday. And Monday, it started out worse. And then, of course, by the end of the day, it got a little bit better and then a little bit better. And then here's the big when rates came down quite a bit. So the bond market is very close and shows pretty close what's going on in the marketplace. And then we're kind of just hovering right here at this 25-day average. So you'll notice that there's, a lot of places that rates could go higher, and there's a lot of, barriers that we're going to have to go to get into a place where interest rates are just a little bit better. So my forecast here is, well, we had a lot of good inflation news. We're going to have some earnings news. And if that's worse than expected, then you're going to see interest rates go down. If it's better than expected, that's inflationary. And that means that interest rates will probably go up. We'll see the Fed raise rates a little bit, on the 26th, 0.25%. After that, we don't know if they'll pause for a little while or what happens. My prediction is that we're going to see interest rates pretty much start to chip down, not really, really fast like we've seen this week, but I think that we've reached the highest part of inflation. And now for the last 2 months, we've seen it kind of chip down just a little bit each time. And then this month, a lot. So what that means for inventory, though, is that between now and December, we're going to hit a period where we're going to be the tightest in inventory that we've ever been in the last 5 years. So be prepared to start doing multiple offers and things like that. And tomorrow, I'll give you a strategy on how you can win the offer today. And then just remember, with interest rates, you can refinance those down. And I'm going to talk a little bit about that more tomorrow. Hey, everybody, have a great day. Have a great week. My suggestion still is to lock in as soon as you get under contract. And then, if rates come down between now and the time of closing, we can always lower your interest rate. All right. Thanks so much for listening. If you would like and share my, whatever social platform you're on, I would really appreciate it. All right. Thank you very much.